3, 2. Hey, it's Bill Spadea here. I am joined by Chris Chichester, who is the president and CEO of Jersey Central Federal Credit Union. Chris, welcome to New Jersey 101.5. How are you?
I'm great, Bill. Thanks for having me.
So we were talking a little bit about credit unions, and the first thing that, of course, comes up is young people and their need to get their financial life started. How do you guys help them?
Well, that's a great question, and unfortunately, it is something that comes up all the time. If you didn't have a great role model growing up that could give you that guidance, you're not going to get it in school, and you've got to start somewhere. And we hope that at some point, somebody will come to us and ask those questions. So one of the first things that we tell people is you've got to get started, and you've got to get started on the right path. The first thing you want to do is you want to establish some credit for yourself. You want to show people, you want to show potential creditors, potential landlords, potential employers that you're a responsible, thoughtful, reliable person who can manage their affairs.
So, Chris, you shouldn't avoid having credit, right? You want to establish credit.
Absolutely.
So having a credit card is not a bad thing.
Absolutely not, as long as you can manage it properly. You know, I do talk to people who say they prefer to work in cash. And that's fine for everyday things. You know, you got to stop and get a cup of coffee or whatever. But at some point, you're going to make a big purchase in your life, whether it's a car or a house or, heaven forbid, you have an emergency and you need some extra money. You're going to need credit, and you're going to have to apply for a loan or a credit card, and somebody's going to need to be able to evaluate you.
Now, putting aside student debt for a minute, what would your advice be in terms of when does it get too much? When does that millennial say, you know what, that Visa card is just a little bit too high? Where is it? Is it $1,000, $5,000, or more?
That amount is going to vary from person to person. The big thing is, can you pay it off every month? If you're making, pick a number, $30, $40, $50, $100,000 a year, what you can afford is going to be different. But you need to look at what you make every month, what you make every month versus what your bills are. And if you can't afford to pay your bills, then you've spent too much.
Now, tell me about Jersey Central Federal Credit Union. You're in Cranford, New Jersey.
Yes.
Just what's it like to work there? I've said this often on the air. I rate companies that I work with based on the satisfaction of the employees. You know, when I see happy employees, I know I'm getting involved in a good company.
Mm-hmm. Yeah. For us, I was taught when I first started there that we're problem solvers. We happen to be in the banking business, but nobody cares about the details of what that means. All they care about is what it means to them. When they have a problem, they come and they talk to us. Whatever that problem may be, a lot of times there's a financial aspect to it. And they know that they can come and we're going to help them out. We're going to listen to them. We're not just going to look through a booklet and say, well, our policy says A, B, C, and D. We're going to listen to them. We're going to find out exactly what that problem is. And we're going to try to come up with a solution that's going to help them out, not only for today, but that's going to be a longer-term solution.
Last point, credit scores. People have in their heads that they need to have an 800 credit score. Is that accurate, or can you do okay if it's a little less than that?
Obviously, the higher your credit score, the more options you're going to have. You're going to have more credit available to you. But that can also be a problem because sometimes the more money that's thrown at you, the more likely you are to spend it and get yourself into trouble. But if you have a lower credit score, that's not the end of the world. People have emergencies from time to time. They get into trouble. Maybe they miss a payment here or there. It's not something that you can't recover from. The lower your credit score, maybe the more expensive your credit is going to cost you. So if you go to buy a car, they're going to charge you a higher interest rate, which is going to cost you more money over the term of that loan. You may have trouble getting a mortgage if your credit score is too low. So obviously...
And do you work with customers to help them repair that?
We do. One of the first things that we do is we'll actually go through their credit report with them because a lot of people don't know what it's made up of. They don't know what a credit score consists of. They don't know how their credit history works. So one of the first things that we do is we sit down and we actually go through the credit report with them. These are the components of it. This is what it's telling us. These are all the creditors that you've had over the years. Here's the ones that you've paid on time. Here's the ones that you've been late with. All of that stuff factors into your credit profile, and everybody's is different.
Okay.
And we try to educate them on what all these things mean and how they can improve their own situation.
Right. Okay, Chris, I appreciate the time this morning. Thanks for talking to me.
It's been a pleasure.
Fine. I am a happy credit union customer. My wife and I belong to 2 credit unions. We've never looked back. It's an outstanding level of service, and of course, all the products that you need are right there. Find your credit union at bankingyoucantrust.com. Awesome. Thank you, guys.